Hey everybody, welcome back to the Thursday night financial thing YouTube live stream. Great to see everybody here. It is a celebratory day because we are back broadcasting on the original channel, which is super exciting. I will tell you how that all came to be and why the channel is back. It's a very, very random occurrence. We have a lot to get through as always today. We're going to be doing some peer-to-peer lending news, some talk about what's going on in the markets, chat a little bit about LendInvest. We'll do our LoanPad update like we do every week. And we're going to talk about some the House Crowd Administration report that came out recently and take a quick look at that, see how it's going. We're going to look at the Trading 212 portfolio update. We got absolutely hammered over the last probably over the last week as oil has taken a bit of a beating, so the portfolio has definitely taken a hit over the last week, so I'll show you what's going on with that. And we'll do a little bit of cryptocurrency news. We're going to talk about the concept of staking. People are always asking me, how can I get some returns on money these days in the form of interest? And one of the ways that we can actually look at doing is to stake cryptocurrency through companies like BlockFi or Gemini or Coinbase and receive a return on money and to do that. But the problem is there are some risks involved that are not really well documented. So I wanted to kind of go through that. And if that's something you're interested in looking at, I just want you to be aware of what the risks are. If you can go ahead and hit the thumbs up. Again, welcome to back to the old channel, which is super exciting. Hit that thumbs up for me if you're enjoying the stream, and we're going to give away a lot of valuable information for you, and hope you enjoy it. Quick shout out to everybody as usual. We got John here in Swindon, #1 on the stream, Colin in the Peak District, Peter Vince in Leatherhead, Paul Bagworth in lovely Kenilworth. Debbie is in the Hot Cayman Islands. I know you dodged the hurricane that was also came in our direction. We just Hurricane Elsa. We didn't see really anything more than a bit of rain over here from that, so it kind of just came and went. But I know you're down there in the kind of hurricane capital of the world, down in the Caribbean. Stephen Hale is in Nottingham. Steve Manton in Solihull. And Black Label Expat. What it do? I think I know that picture looks very familiar. Black Label Expat. I think you're down in Colombia, maybe. Paul New in Stockport. Thank you. Great to see the new channel back. Paul says thank you. I really appreciate your support. I know it's been a frustrating thing, but we were eventually victorious, which was very unexpected. Hi, Mike in Southampton, Dave Dawson in sunny Staffordshire, Robert in Greece, in Crete, Alan Lomas in Chesterfield, John Day in Nottingham, Annabelle Nair, Buenas tardes a todos. Welcome, bienvenue, Annabelle. Nice to see you. Alan in Basingstoke, Arthur Atchison, Tony Walton, Brian in Woburn, and Alan Stratford in Malvern, Worcestershire, and David from the Chilterns is here. So wherever you are in the world, or in the UK or in the US watching us, thank you for joining. Yes, I do have the England shirt on, and full transparency, I am not a huge football fan, but whenever England gets into a winning situation, you got to be a fan of that. So I have to support the Lions with the retro England shirt. Hopefully they can do some good things on the pitch. In America they say field, the football field, but it's always funny when I hear the word pitch. So let's get right into doing the LoanPad update. So we got a lot to get through today. I'm going to really try to keep it under an hour. If you have questions or comments, pop them in the chat. We'll do a Q&A at the end. But let's see what's going on with LoanPad this week. Again, we see now £34.6 million in LoanPad loans against a portfolio of 74.7 million secured. Still, this average loan to value is still at a very manageable 41%. We got the live loan number here at 94. Average loan size 368, just a little bit, hair under 369,000 pounds. And again, the most important thing here, liquidity, is if for some reason you need to access your cash right now, as of this moment, there is less than 1 day liquidity, which is becoming hugely important within peer-to-peer lending, as we see. So LoanPad, again, continues to do exactly what it says on the tin, which is provide you with a decent amount of interest for the amount of risk that I believe you're taking. So very, very happy with what LoanPad is doing. We got a little news report back from Blend Network. It's kind of just an update on their quarter and what happened. As you know, I'm a fan of what Yan Marciano is doing over there at Blend. If I had some extra capital, that would be a place I would be happy to park some money at the moment. But they said in June they listed 3 loans that help fund the construction of 40 residential units across East Sussex and North Hampshire, and they agreed to fund their largest ever project, £3.4 million total net facility. The first tranche of this loan, £1.1 million, was funded by just 279 investors on June the 1st. Quite impressive. They won FinTech Business of the Year in the UK Leading Tech Awards, the Go Tech Awards. That's a big achievement for them. And in quarter 2, a total of 1,052 registered Blend Network investors lent on our loans. And in June, close to 600 lenders got the chance to lend on loans that we listed. So again, another case of a peer-to-peer lending company that is really heading in the right direction. They're lending on new projects, and they're just really staying the course and continuing to offer quality loans as far as what I can tell. We're going to look at the news this week, see what's going on. Lend investors planning a £300 million IPO. Now, I think I've been saying this for a little while. I think that in the future, Lend investors are going to go the way that Funding Circle, not the bad side of Funding Circle, but they're going to probably end up abandoning retail investment money. I just think that they're going to become more institutional in the future, and dealing with peer-to-peer lending on a retail level is very, very time consuming. It's expensive, and but LendInvest continues to do really well, and they are going to try to offer this £300 million IPO. They did try to do that a couple of years ago, but abandoned it, which I was surprised about, but I figured it would come in the future. And would I buy shares on an initial public offering? Probably not. It's not the kind of share I would personally look at, but they are going to be offering this IPO, which will give them a lot more exposure to the general public when this IPO gets released, which could mean more business for LendInvest on the retail side as people look to try to get yield on their investment. So we'll see. We'll see what happens with that. And also, LendInvest has changed their buy-to-let criteria due to broker feedback, which I think these moves are good moves. They're saying for multi-unit freehold block cases that it used to require a minimum of 12 months experience managing the size of the property. They want to have these certain standards. If they're loaning to a landlord, that landlord knows what they're doing. So now they are requiring a minimum of 12 months experience managing a similar size property. If the multi-unit freehold block experiences less than 12 months, the customer must be currently managing the equivalent same number of other buy-to-lets in the background for over a year. So I think, again, these are very positive things that LendInvest wants to make sure that the people that they're lending to really does have experience. And there's some other things that they've changed. For defaults, the lender now accepts borrowers with none in the last 12 months, 2 in the last 24, and for country court judgment, it accepts none in the last 12 months and 1 in the last 24 months, up to a maximum value of £5,000. So they're really, again, looking back at the history of of the borrower, and if they've had a good record. And yeah, when they do release this IPO too, it's going to bring in a big influx of money that they'll be able to use to expand their lending business and buy-to-let mortgages and other things. So hopefully they will keep their underwriting standards high. That's what we want to see. Lending Action Group is optimistic about court rulings. So there's been a court, obviously this thing with Lendy and the Action Group has been going through the courts now. There was a court case over the last, I don't know exactly what the date, I think it was within the last week. And what the Lending Action Group is trying to do is to make sure that Model 2 investors be able to recover funds directly from the loans that they help to fund. And the Level 2 investors would essentially be paid before Level 1 investors or Model 1 investors, who are defined as creditors. And so there's been a court case about this. The ruling is going to be in the next 6 to 12 weeks on whether the judge agrees with that or not. Hopefully the judge does agree with that, and Model 2 investors would be protected by Lendy under fiduciary responsibility, which means, retail investors like you and I would be paid out before creditors would be paid out. So, that would obviously be the best case scenario. Again, how much is going to be retrieved in the administration is really sort of still up in the air at the moment. But, Lendy has obviously been run very poorly, and if you want to read more about that, you can obviously Google it, and we'll hope for a really positive outcome on the court case, and hopefully the judge will, have a moment of clarity and rule in the favor of what the Action Group is asking for. So we saw a couple of big pieces of news here. If you didn't see the stream last week, we had Mike Bristow from Crowd Property on the stream live. You can have uploaded that to the original channel, which you're watching from now, or you can go to the other Financial Thing channel and rewatch that Q&A session that we did with Michael Bristow. And we did talk about the institutional investment that they've announced this week, which is 300 million pounds of institutional money that they have now to be able to use to lend. Of course, there was concerns about, will Crowd Property move away from retail peer-to-peer lending? Now they have this 300 million pounds. Always brings up the question, what do they need retail peer-to-peer lenders for? But Michael said on the stream last week that he was very committed to continuing supporting retail peer-to-peer lending, because that's what the company was built on. So if we are to believe what Mike says, then having institutional money is just going to allow them to increase their lending and to be able to maybe go after other loans that they maybe couldn't do with retail side. Maybe there's just such a misbalance of demand from investors and loan supply that it becomes difficult when you don't really know exactly how much money you have to be able to use from retail to lend out. But now they have this 300 million pound institutional money. It gives them other options to move forward. And also with them, they are going to be launching a third crowdfunding campaign on Seeders, which is equity crowdfunding. It's where they are going to sell equity to investors. As you know, I am not somebody that invests in this type of equity crowdfunding. I think it's very, very hit or miss from an investor side whether you actually get your money back or actually make anything on your money. There's always some liquidity on these platforms as long as things are okay to where you can buy and sell different equity shares on there. But again, I think it's, for me, not something that really fits in my criteria of what I look for in investing. But I think Crowd Property is obviously going to look to raise some more money for expansion, which I don't think is a bad thing. I think this is something that they do from time to time, and obviously they're doing this Australian expansion too. So they have announced this third round that will be up on Seeders soon. If you are a fan of crowd property and you want to become an investor in the actual business, then you could pick up those Seeders shares. Yeah, these are just little kind of interesting news tidbits I found. Crowdcube made an interest payment error. They were paying out people on money that they had collected from, I think it was past administrations of different companies, and they didn't withhold taxes on those payments, and so the HMRC has slapped Crowdcube on the wrist and said that they're probably going to have to pay about £213,000 in penalties because they did not withhold tax on those 78 interest payments they made over a period of about 2.5 years. But some of that £213,000 that Crowdcube is going to have to pay out will be covered by insurance. One of the interesting things too, and we talk a lot about companies and how whether or not they're profitable. So Crowdcube is one of these companies that is not profitable. You can see the company's accounts show that it posted revenue of £7.9 million ending the year of 2020 in September, but with a loss of £3,000. That was attributed to increased costs, more hiring, product development. Again, that is, I would, for Crowdcube, probably in the growth phase, but something to pay attention to. A loss of £3 million. That's, a significant amount of money for a fintech company to be in the red. So it'll be interesting to see what the accounts in 2021 show, whether they can actually be profitable. Because you do want that platform, again, to be a profitable platform. If Crowdcube for some reason were to go down and you were holding shares in equity companies like whatever shares you bought, Assets Capital or Crowdcube or some of the other peer-to-peer lending companies, your liquidity could completely dry up, and if there's no market for sale, then the shares become questionable to what they're actually worth. So that's why I pay attention to the company accounts on even companies like Seeders and Crowdcube, because you want that company to remain solvent and liquid, so you're able to buy and sell your shares if you need to on those platforms. Let's see, how long have we been going for? I'm trying to really not to run over an hour. 22 minutes. Okay, perfect. Okay, alternative finance surges as UK climbs global rankings. Yeah, the UK has been very prevalent in alternative finance. I think it is second place. The US largest national market was $73.62 billion of lent money on alternative finance, and the UK 12.64 billion, which is, considering this is a pretty large amount, even much bigger than China, which was 8.9 billion pounds. So that just goes to show you that business lending through alternative finance has just become very prevalent in the UK, and especially the US and China too, which China is always such an interesting country to me because sometimes they just make wacky moves. And I think this also goes along with what's happening with Bitcoin in China at the moment. We're going to talk about that a little bit later, but I noticed one of the news pieces that came out about Didi, which is a rideshare company in China, that the Chinese government have removed Didi from the apps in China, and just this control that they have over these private companies, how they could completely just shut them down in a very short amount of time is concerning. So I think it's actually a good thing that China is releasing it's saying no to Bitcoin mining. They want to probably control Bitcoin in certain ways, but China is, not to get too political, but they can really come down on companies, even just private companies, very, very hard and take them out very quickly. So China, but they do seem to be somewhat prevalent in the alternative finance lending world, with almost $9 billion in global market volume. So, but the UK is ahead of them, which is really interesting. That shows the adoption of alternative finance in the UK. The SMEs are actually using alternative finance to borrow money versus going to the banks, which I think is a really good thing. Okay, we are going to look at, this is a report that came out from I can never pronounce this, Quantuma, which is the house crowd, and we're looking at their administration on the developments and loans and how much they've recovered. And if you're a house crowd investor or you have an account, you can log in and see this information. But this is the development loan book, and for anybody again who's sort of newer to peer-to-peer lending, maybe watching this in the future, these are the things you got to be careful when you're investing through peer-to-peer lending companies, that if for some reason the company goes out of business and into administration, there is no guarantee that you're going to get your funds recovered. Number one, administration costs are very high. They tend to suck a lot of the money out of the recoveries. But number two, a lot of the times the recovery amounts don't really, they're not a lot of what the original loan capital outstanding is. And I'll give you some examples here. You can see that capital outstanding, for instance, on which was the one that, this is the one I was invested in personally, which is HCD23, the Downs, and capital outstanding here was 9.7 million pounds, and total anticipated recovery is 2.25 million. So a little bit over 20%. You can see all the potential capital shortfalls here on the right side. I'll just zoom in a little bit here. Everything here you can see is pretty much in brackets, which means there is going to be a shortfall on what is anticipated to be recovered. And I use this word anticipation very loosely because that really doesn't mean anything. Now, some of them are final, right? Some of these have been finished, but like the Downs, for instance, has not been completed yet. But we can see here there's going to be a shortfall of 7.4 million pound shortfall. Some of them will actually be in the plus, which is unusual in a recovery. So if you were lucky enough to be in deal number 19 or 20, you might be getting some of your interest back. But in a lot of the cases, you are going to be in the red, which is very unfortunate. And again, we have the administration fees to take into consideration. Now, if we look at the bridging loan book, this is not development. This is just the bridging side. You can see here there's some that are in the positive, and then we've got some here that are going to be anticipated shortfall of 213,000, 178,000, 50,000, and it keeps on going all the way down to this nasty one, which is number 191, which is 913,000 anticipated deficit. And then some that they simply don't know what's going to happen with these loans, because you can see here it says continued to attempt to make contact with the borrower. So that means they have not been able to get anywhere with that, which is why you see TBC, to be continued. So again, this administration book looks a bit of a mess at the moment. As is the nature of administrations, this is what happens. Okay, Property Partner, they have been coming up on these 5-year anniversaries. For anybody that doesn't invest through them, it's a share deal where you can buy shares in properties and get rental yield if you're lucky enough to get that. And what's happening is a lot of the properties are coming up for anniversaries at the 5-year mark. They put it out to a vote to investors and say, do you want to hold the property or do you want to sell them? What I've noticed is nearly all of them are, the investors are voting to sell. And to me, that doesn't seem like a good thing for Property Partner, because it shows maybe a lack of faith in the business model, that people do not want to stay invested and they want to try to get rid of the properties in order to try to get their money back. One of the bright sparks that we see here is that some of the dividend yields on some of the properties actually are being increased, which is, you can see here, this Terrace House in Newcastle is going to be increased from up to 4.5%. So most of them going up about 0.5%. This one going up from 3% to 4%. So a little bit of bright sunshine in the dividend side, but we also see a decrease down here, flat 3 at the Tau. Mint is going from 2.25 down to 1.5%. Personally, I voted to sell out of the properties that I was invested in because, again, I'm not really convinced of Property Partners' future, and I don't know. I just don't know what the future is going to be, and I think it's, for me personally, I would like to see some of this capital coming back. I'm not a heavily invested in Property Partner anymore. I sold quite a lot of the shares that I had on the secondary market when COVID hit. But they have some pretty in-depth reporting. You can see all the units that they've been able to sell and units that are on the market. So if you're a Property Partner, if you're interested in them, you can actually go to their blog and read these portfolio updates. You don't need to be logged in. And if you just want to get some information on there, you can see these reports. But it's pretty interesting. Also, Mintos now, they also show their recovery updates on, this is a European platform for anybody watching in Europe. If you're a UK person, investing in that is not possible, but that might not be a bad thing if you look at the total amount of recoveries here. Recovery percentages, I think, total about 46.2%, which is not terrible, but it's not great if you're putting in your hard-earned money and the recovery is only at 46%. Again, part of the risk of peer-to-peer lending. Some of these companies have run into some problems. You can see one of the companies here, this Akulaku, has a principal exposure of 20 million euros and only 4.7 has been recovered. So we're talking about 20%. Not particularly good. If you look at the total of the suspended platforms that Mintos aggregates, here 30 million euros worth and only 6 million has been recovered, again 20%. And then if you look at down in the defaulted section here on the left, principal exposure 134 million euros, of which principal has been recovered. Down here 16 million, so again 20%. So that seems to be something that is prevalent over recoveries in peer-to-peer lending. That number of 20% seems to be appearing a lot in some administrations, also Mintos recovery. So just be aware that if you are investing in loans that run into trouble, you may be looking at a 20 to 30% recovery in some cases, maybe more. It just depends which loans you're in, but be very careful. Very careful when you make sure you're diversified and you're not just lending through, if you're a Mintos lender, you're not just lending through any one or two of these companies just because you see that they pay high interest rates. Because if the recovery is bad, something goes wrong with those loans, you are going to be putting yourself at risk. Yeah, so pretty interesting on the recovery side. The good news is at least some of it is being recovered, and we're not talking about zero losses, but definitely some concerning things going on there on the Mintos recovery, but we'll keep an eye out on that. UK investors plan to boost portfolios as Freedom Day approaches. Now, this could be a really good thing for the stock market. They've done some studies here. It's not a huge study. 735 investors, all of which have a portfolio in excess of £20,000. This would be in stocks and shares. They found 39% said they will invest in more traditional asset classes such as property, but they will be, when things start to open up, 2/5 of UK investors, which is 40%, so they'll become more active in how they invest once the last social distancing restrictions are lifted and the economy reopens fully. A third plan to invest or increase their investment in the stock market once the last restrictions are lifted. 13% plan to invest in cryptocurrency in the next 12 months. And with this rising to 32% amongst those aged 18 to 34. So you see this crypto investment adoption, especially in younger people. They tend to be more switched on when it comes to crypto. No offense to anybody who's older out there that owns crypto like me. But what you might see is this influx into the stock market once things open up. And you might, again, see this general boost in the markets because more money will start to flood in once people become more comfortable that the economy is going to do better when everything kind of opens up. So that's interesting. We've seen a lot of talk on that, markets they're bubbling and they're going to crash. Somebody posted something on the Facebook group, and I kind of go with the adage of, yes, you can say, well, it's going to rain. Of course, we just don't know when that rain is going to come. It's a given that the stock markets will eventually correct. I mean, we've seen it happen the last week with oil, this correction. And but as more and more people come into the markets and buy, the price will increase. We just don't know where those people are actually going to put their money. If they're going to put it in the UK or if they're going to put it in US stocks, it's hard to predict. But it is interesting that the mindset of comfortability, that when things open up, people then become comfortable to invest more of their money because they've been sitting on the sidelines because of COVID. They don't know what the economy is doing. So you may see a big uptick in the stock market once that happens. Assets Capital launches summer rate reduction. They have reduced their rates to borrowers by 0.45% across some of its loan products until July 31st. Now, this is what I think is going on here is that they are trying to attract more lending into Assets Capital because obviously the demand for retail peer-to-peer lending loans on assets has been really high, and they've had this pause on lending for many, many months, so everything is kind of ground to a halt now. Assets is trying to attract those borrowers so they can get that retail money put to work. So they're offering this interest rate reduction, which is, almost 0.5%. That's not a small amount, the way interest rates are right now. So that should make Assets Capital pretty attractive to borrowers, which is a good thing. London capital finance investors have filed complaints against the FCA. More than 1,000 complained to the city regulator about its conduct in failing to supervise London capital and finance, and that's in the bond collapse. And the matter was escalated to the Financial Regulators Complaints Commissioner, which hears complaints against the UK FCA. I don't think that this is going to work out well for these complaints. I don't see what's really going to happen. Maybe they're trying to get financial compensation, but the FCA really is going through some difficult times when it comes to really keeping an eye on companies that are not operating in a correct manner. And this is one of these cases, again, not peer-to-peer lending, but completely bond related. So it goes to show you again, anything can collapse at any time. Bonds, a stock could go out of business. A company that offers a stock on the exchange can go out of business. Bond companies that do mini bonds or regular bonds can go out of business. And these companies these investors are trying to file complaints to get compensation about the money that they've lost. Totally don't blame them at all. They're saying that the London Capital and Financial and its associated persons raised and misappropriated almost £240 million of retail deposits. So not a good thing. We'll see what happens with that. I don't think that they're going to be victorious in those complaints somehow because, again, it's an investment, but we'll see what happens. So I wanted to give you a little bit of an example of what I call FUD, fake news. And this is not necessarily fake news, but the way it's been spun is very misleading. Again, I've talked a lot about cryptocurrency and how there's a lot of people that do not want cryptocurrency to succeed. absolutely the banks do not want it to succeed. Most banks, I would not say not all banks, but there's a lot of banks that don't want your money coming out of their banks into cryptocurrency, because the way they make money is to lend your money out to pay you very little in interest, and that's how they profit. So the FCA, which is absolutely on the bank side, has banned, now this news story says has banned cryptocurrency exchange Binance from the UK. Now that's not really the whole story. It has banned a part of Binance, which is Binance Market Limited, which is a part of the Binance group. And this news story should really, in the headline, state that, because they have not banned Binance. You can still use Binance to buy and sell crypto. It is the biggest exchange in the world. Very, very misleading article. What they're saying is that Binance Market Limited, which is for BML, has not registered with the FCA and has been banned from offering services to the investors in the UK. So from what I understand, BML does not offer any services anyways. It's Binance. It's a different part of the Binance group that offers the cryptocurrency exchange. So you can continue to buy and sell cryptocurrency on Binance. Again, very misleading piece of information the way it was written in this headline. So a lot of people, when they first saw this headline, were very nervous. They thought, oh God, this is the end of cryptocurrency in the UK. No, it's not at all. Let's see, how much time have we been running right now? 41 minutes. Okay, we're going to run through. This was interesting. The majority of crypto investors plan to increase their exposure. The majority, 82% of institutional investors with exposure to crypto and other digital assets, plan to increase their holdings within the next 2 years. This was a study that was conducted of institutional investors, wealth managers from the US, UK, France, and Germany, and the UAE who currently have exposure to crypto. And 4 out of 10 said they will be dramatically increasing their holdings. 1% said they would sell their entire holdings, and 7% said they would reduce their exposure. Now, what you're going to see, and I've kind of been saying this on the streams in the past, that over the next couple of years, you're going to see more and more institutions coming into cryptocurrency. Not necessarily a good thing in some ways, but it will result in more crypto being bought up off the open market. If you're a Bitcoin investor, you're going to see less and less Bitcoin being available for purchase as institutions come in and take big positions, like Tesla has done. So it's an interesting that they view crypto as a place that they want to increase exposure. And again, I really think what you're seeing now within the crypto world is not the way that it's going to be, especially with Bitcoin. In the future, I think you're going to see a very big increase in value in the future. Again, not financial advice, just my research and what I've done. And again, this really shows that this story here, cryptocurrency investors are dabbling with the asset class. Again, this is retail investors who are kind of putting in £100 here, £100 there to test it out. Most of them don't really understand what they're buying, what they're doing. They just, they're seeing a lot of news stories about when crypto was at its highest, and we call it FOMO, fear of missing out. They come into asset classes where they think that they're going to be able to make really big returns. A lot of the time it's very uneducated about what they're buying, and then once these corrections happen, they just end up selling at a loss, and it sort of washes them out of the market because, again, they get scared. They don't really know what they're buying. Bitcoin investors have concerns about environmental impact and Musk. Of course, we've heard this story over and over again. Elon Musk tweets about Bitcoin or whatever coin he happens to be on his radar, and then people get scared and sell. Now, this is very funny here to me. A survey of 837 investors found that 32% of Bitcoin investors sold the cryptocurrency last month, and 1 in 5 attributed their sale to Elon Musk's comments about cryptocurrency being bad for the environment. That's crazy to me that you're going to sell your cryptocurrency based on one person. Yes, he is obviously has a lot of power in the things that he can say that can manipulate the market. However, I will say that Bitcoin will be around long after Mr. Musk has either decided to buy more or completely sell out of Bitcoin. Yes, he will have short-term impacts on the price of Bitcoin, but long-term, he is not Bitcoin. Neither is Michael Saylor. Neither is some of these whales that hold billions of dollars of this stuff. It will continue to survive long after Elon Musk is out of the cryptocurrency space, if he chooses to do that. And another thing that I was thinking about, when he does tweet about how bad Bitcoin is for the environment, he's holding $1.5 billion of this stuff, and it wouldn't really make sense for him to be tweeting about something that's going to impact his bottom line so severely. So brings into the question is, why would he say these things publicly? And my theory is that he's buying more in the background. When the price dips down, he knows what the potential is. He tweets something bad, the price goes down, he's able to come in and buy more Bitcoin at a lower price. I mean, nobody in their right mind is going to say something negative about an investment that they hold, unless either they don't hold it or they want the price to be manipulated to go down so they can pick up more. That's what I think about it anyways. So let's look at the trading 212 portfolio. As I said, we have gotten absolutely destroyed this week. Currently the value, remember we started at 5,500 pounds. Again, when I say destroyed, relatively from where we were at, a high of 16,795 down today to 14,360. So we've had about $2,000 just wiped, 2,400 pounds just wiped off of this portfolio, mainly because of the oil and the energy has taken a beating. You can see here one of the biggest disappointments has been Tulo, which we were up about 11% at one point, so we've had a 12% negative swing on that. All in small holding down 7. Microvision continues to struggle. Lloyds Bank, we sold out most of it when it was up about 89%, so that turned out to be not a bad thing. And then Laredo, which we can see the price here, this is our biggest holding, 106 shares, high of 96. We've plopped all the way back down to $75 US. We had a buy price of 27.57, so we're still very much in the green. And I don't expect this oil dip to really continue for too long. I'm still very bullish on oil and energies. I think that the production of oil is still being limited. The supply is going to continue to increase as things open up more, people start traveling more. We're seeing the first releases of cruise ships going back out to sea. More planes are going to start flying. Oil demand is going to continue to increase. I still think oil at $100 a barrel by the end of 2021 is very doable. And I don't know, we may make some changes to this portfolio, but probably going to remain pretty much where it is. I mean, we're still doing good as far as the total portfolio. And again, when the 1 year anniversary hits in September, whatever has been profited, we're going to give away a percentage of that to charitable cause. And so far it's doing really well. We've gone from 5,500 up to 14,357. Hopefully, as long as the markets can continue to hang on and that big crash doesn't come, then we'll continue to be okay with this and be able to give some cash away. So let's look at the price of Bitcoin real quick. We are at 32,893. We've seen a bit of a drop again. Just seems to be sideways trading between 35,000 and 30,000 US dollars. We've dropped 5% in the last 24 hours. Again, Ethereum experienced about a 9% drop. And something that I wanted to say too about the crypto market, we saw this big drop and this big crash a few weeks ago, and a lot of people were just saying, well, this is the end of Bitcoin, right? And the very interesting thing, if we look at the 1 month chart, so look at the 3 month chart, when we were here at its high point, 63,000, about 60, yeah, just a little bit over 63,000, almost 64,000, down now to 32. So we've seen a 50% drop. The crypto market has been very, very resilient to be able to take on such a drop like that and not completely crumble. And we see this support down here about $30,000. If you saw a 50% drop in the equities market, it would be much more difficult for the equities market to survive that type of correction. And again, this to me just shows how resilient the crypto market is. We have a lot of people that are holding cryptocurrencies even though we've seen this 50% drop. Now, a lot of inexperienced investors who don't believe in this stuff for the long term are the ones that bought in when the markets were in the $64,000 range and ended up selling for a loss because they got scared down here when it hit 30,000. Big mistake. As I always say, you only lose money when you sell. If they would have held it long term, if they knew what they were buying and they had done their research on that, then they wouldn't have sold in these panic selling times down here. But a testament to how resilient Bitcoin, the general Bitcoin market has been. I mean, we haven't seen the bottom completely come out of the floor of Bitcoin. It's been holding at this level in the $30,000 range, which, by the way, is still 10x from March of 2020 when the price was at 3,000. So put that into perspective. We've gone from 3,000 up to 64, huge jump, and then back down into the 30s, but still 10x from where we were a little bit more than a year ago. So a very resilient result for Bitcoin. Let's see, how long are we? Oh gosh, we're at 52 minutes. Okay, one other thing I wanted to talk about is staking here. Now, you can use companies like BlockFi. If you own cryptocurrency, you can stake your coins on companies like BlockFi and Gemini. So Gemini is the company that's owned by the Winklevoss brothers, who are, of course, the founders of Facebook. And they offer interest rates. I'm just going to zoom in this a little bit. If you want to stake your coins, you can stake a lot of coins like Dogecoin, Gemini Dollar, Uniswap, Bitcoin. You can get 2.5%, Decentraland, all the way down. So highest is Dogecoin. Obviously a lot more risky, those coins, so they pay more. And what they're doing is basically, when you're staking it, they're loaning out money to people, and you're basically getting an interest payment for that. But what I wanted to explain to you about that is, it seems like a good idea, right? Even BlockFi, you can see the interest rates here. If you were to own Bitcoin, you can get 4% for up to a quarter of a Bitcoin. So you can get yourself 4% interest by staking your Bitcoin. But there are some risks to doing this a lot of people don't really understand. Number one, there are some terms and conditions that you have to really pay attention to. For instance, Coinbase does offer staking. And also, if you leave your money on, or you leave your coins on one of these platforms and they run into problems financially or go bankrupt, one interesting thing in their terms, if you're a Coinbase user, is your digital currencies are not segregated. So it says in order to more securely custody assets, that doesn't make any sense in English. In order to more secure custody assets, Coinbase may use shared blockchain addresses controlled by Coinbase to hold digital currencies held on the behalf of customers. Although we maintain separate ledgers for client and Coinbase accounts, Coinbase will have no obligation to segregate by blockchain address digital currencies owned by you from digital currencies owned by other customers. What that means is if Coinbase were ever to go into administration for some reason, it could be a real mess that some of these blockchain addresses are shared by multiple people. And I think there's a really good case for removing any digital currency that you have off of these platforms and putting it onto a cold storage wallet like a ledger. Of course, both has its pros and cons. If you control it on a ledger and you lose the seed key to this, or something happens to your ledger, you're going to have a problem. There's a 14 character seed key that you need to have an access to, and you would want to write down in several places. But if something happened to the hardware wallet, that wouldn't necessarily, you could still get another wallet and access the cryptocurrency. But if you lose your seed key, for some reason, you're going to lose all of your cryptocurrency. On the other hand, keeping it on a platform of a company like Coinbase, while it does have some insurance, it may not cover all of the losses. And if something happens to Coinbase and they were to go into administration or go bankrupt, it's questionable whether you'd actually be able to retrieve all of your cryptocurrency. So that is one of the disadvantages with cryptocurrency and having a cold storage wallet versus leaving it on the platform. Now, Gemini, in its terms and conditions, says all customer assets are segregated using unique digital addresses that are independently verifiable on their respective blockchains. So that would mean that people would be easily identifiable as to what they actually own. So I think that's a major benefit of transparency through a company like Gemini, and also you can stake and be pretty sure that your digital assets are completely segregated from other people's digital assets and from Gemini's digital assets, which is important. Now, I wasn't able to see Coinbase's terms and conditions on that. They didn't. Sorry, not Coinbase, Binance, because they don't have anything in their terms, at least on the US site. I haven't looked at the rest of the world site, Binance.com. But just be aware, if you are considering staking your coins, which you can earn interest on them. I mean, in the time right now where we are looking, banks are obviously paying nothing. And you do own some of these crypto coins, like even Bitcoin or Ethereum, which you can stake Ethereum for 6 or 7% on Coinbase. Just be aware that if you're leaving your money on, or you're leaving your coins on that platform and something happens to that platform, there is that risk and that level of risk involved that you are locking in your coins and they may not be able to be separated if something were to happen to Coinbase. So I'm kind of a fan of maybe doing both, like leaving some of them on the platform to stake and to get some interest from. Why not? I mean, if you're holding the coins long term, why not lock them up and stake them? I don't think it's a bad idea. And then maybe, having some of them on a cold storage wallet like a ledger to just put in a fireproof safe. You can put it in a bank safety deposit box along, keep the security keys written down, separated, so you have them in a few different places if, God forbid, something happens. But just to protect yourself, again, it's all about diversification, protecting yourself from all different angles should the worst happen. But so that is what is going on in the peer-to-peer lending world and the crypto world. So if you have questions or comments, pop them in the chat. We'll do a little Q&A wrap up again. If you haven't hit that thumbs up today, please do it. Oh, and I wanted to just kind of tell you what happened with the channel too. Call it divine intervention, if you will. I had for those of you who don't know, maybe who are watching this in the future, this original channel that this live stream is being broadcast got taken down. I think it was in March or April in 2020 when we did a giveaway, and YouTube decided that giveaway had violated their terms and conditions, and they removed the stream live and then shut the channel down and said, "You violated our terms and conditions, so your channel has been banned." And I appealed the channel through their appeal process the first time, which I did not get any response whatsoever. The second time, I did a little bit of research and I found a gentleman online who was very, very helpful. He was just a volunteer, but he had access to some lines of communication with YouTube that most of us wouldn't have, and they were able to get he was able to get an escalation on the appeal. But he also looked at my situation. He couldn't see the videos. He didn't really know what had happened versus, I just explained to him what had happened to the channel. And he said that he didn't think there was much of a chance that the channel was ever going to be reinstated because YouTube can be a little bit unfriendly towards cryptocurrency and giveaways because there are a lot of scams out there. He thought maybe what I had done looked a little bit fishy because, we were going to give away the Bitcoin to you guys, which I'm still going to do, by the way. We're going to have a giveaway soon enough, but that's going to be through email. But I'll be announcing that probably in the next couple of weeks, how you can be a part of that. But yeah, so he escalated the second appeal, which actually got denied too. I think I got the denial after a couple of weeks, and it didn't even come to me. It went to him, and he showed me what they had written, and they said, no, we're upholding the ban. It's over. So at that point, I think that was in April, I had just kind of given up, and we started the new channel, the Financial Thing channel. So I had resigned that the channel was going to be completely banned forever. I started uploading the old videos to the new channel. It was just it was very, very inconvenient, pain in the rump. So I was in the office, I think it was on Tuesday morning, and it was the weirdest thing. I just got a thought in my head. I was sitting here looking at the new channel, and I was thinking, wow, it took me so long to build up the subscriber base that we have. By the way, if you haven't subscribed to the channel, the existing channel, please do so. But yeah, it's taken me such a long time to get to that 1,000 subscriber goal, which in the grand scheme of YouTube is just a piddly amount. We see channels with hundreds of thousands of subscribers, but it is what it is. I grinded through to get to this point of the channel being 1,000 subscribers, and it was really starting to get momentum. And I thought, wow, it's really been slow going with the new channel. And I thought, you know what? I'm just going to appeal. I'm going to put in another appeal. Just try, because what do I have to lose, right? The channel, I thought the channel was gone anyways and that it was never coming back. So I appealed, and I used the same appeal identically that I'd used the previous 2 times. I put in the appeal, and I was going through the Financial Thing website on the video page, and I was replacing the dead YouTube video links that were linked to this, old channel. And then as I'm working on that page, I see the videos come back up, just like that. And I was really confused, and I clicked on the video, and then the old channel all of a sudden appears. And then I get an email from YouTube saying, oh, we've made a mistake. We realized that your video didn't violate any of our terms and conditions, nor has your YouTube channel. So we've gone ahead and reinstated everything. And boom, just like that, within 2 hours of that appeal, the channel was back. And it was such a weird thing, because I don't even know why I thought to even try appealing that third time. And it had been several months. I'd just given up on it, but I appealed, and here we are back on the existing channel. So thank you to everybody that's been supportive of migrating onto the new channel, which is going to be now a backup, because I know if this channel ever gets deleted again, then I want to have a backup channel with the videos on it, so you guys can watch them or look at the tutorials and stuff. But yeah, so it just came back up, and I was super happy. And this is kind of it was a celebratory day. I was just really appreciative that everyone out there had been watching and supporting the new channel and subscribing and helping me get that subscriber base back up. But we no longer have to do that now. I know what not to do on this channel. There certainly won't be any live giveaways or anything that's going to tick off the monster that is YouTube. We're going to keep on the up and up and do things the right way. Anything that we do like that will be done via email. So if you want to sign up for the financial thing email. Just go to financialthing.com and sign up for the email list, because again, we'll be doing some fun stuff through that in the next few weeks. But yeah, that's the story. That's how the channel came to be back. And again, appreciate everyone's support. So we'll do a quick Q&A and see if you have any interesting comments. I know everybody's excited about England. Hopefully, you have to tell me what's going on with the football, because honestly, I've not been keeping up. Hopefully, England will be in the final, if they're not already. Alan Stratford said, I had a message from Santander today that said they will not allow funds to be sent to Binance from now on. Yeah, you're gonna see this. NatWest is gonna do it. Barclays is gonna do it. The banks, they don't want you investing in cryptocurrency. It's just really an excuse for them. If you call the bank and ask them why, they're gonna tell you it's regulatory pressure. But the banks don't want you to invest in cryptocurrency. So, you know, I would say go to a bank that is crypto friendly, you know. Yeah, as Mike says, you can still use faster payments to deposit on. You can still use faster payments to deposit into Binance. Hey Philip, nice to see you. Philip is here. Mike says CEDA's campaign launched today, so that's crowd property. CEDA's campaign. Is that right? Am I CEDA's campaign? Is that what you're talking about? Yeah, sure you are. Anyone invested in Easy Money? No, I have not. Last time I was in London, I tried to get a meeting with them a few times, and they just weren't open to that. So I like to sit face to face with people that I invest through. I know some people have. They got the brand name too, the Easy. Yeah, Assets Exchange Property Pipeline looks very encouraging. They sent out an email that they had put some of the deals that are coming through on the pipeline. So they do have some good deals coming up. David said, I voted to hold my investments in Property Partner, but I agree with you. They are likely to get smaller as properties are sold. There is no appetite for new offers. Yeah, I think as investment demand starts to dry up, it's going to be tricky for them. I don't wish that on them. You know, I hope Property Partner does continue to offer new deals and that they can grow their business, but I don't know. Has it been brought up that the CEO of Crowd2Fund is Matt Hancock's brother? Just think what other pies Nick Hancock, his brother, has his fingers stuck in. I don't know. It's Crowd2Fund is not a company that I've had any experience with. John Day said, I called Invest and Fund recently and was advised 1,000 lenders, 3 to 4 loans a week. Functional secondary market. I forgot to ask average loan size and London area percent. Can any lender comment? Maybe it's on their stats page. Do they have a stats page? How do I think inflation, which is going up, will affect the markets? when you talk about the market, you talk about the stock market. I think it will. I think inflation is going to be very heavily curbed by, especially the U.S. Fed. I don't think they are going to want inflation to keep rising, but inflation is never really a good thing. What we really need is for interest rates to rise. I think. I think we need interest rates to go up, and it's going to take a long time for that to happen. But I think more what tends to happen when you get to these inflation rises is the media is going to hook onto that and scare people. So in some cases, whether inflation is going up or down, it really depends on what investor sentiment is, especially consumer investment sentiment. If they get scared, if investors get scared and panic sell, whether inflation is going up or down, that's what really affects the market. And a lot of that is just media fueled. If the BBC News or CNN, Fox News, and they pounce on some negative story about inflation and how it's going to crash the stock market, you see people panic sell. But I think the markets will continue to, as long as all of this money printing continues and all this stimulus is pumping into the economy, and with Europe opening up eventually, I think the markets are going to continue to be okay. Again, no, I don't know, no guarantee there. Krish Pat. Hello, where can I learn to invest in crypto and stocks considering I'm a beginner and don't have any knowledge? Stocks, I'm not somebody that would recommend you dabble in individual stocks if you're not somebody who has a lot of knowledge. I would recommend index trackers to be a much easier investment method. You can go to my website, financialthing.com, and there is an article right here. I'll give you a link to it. What I think is a important article for anybody who's a beginner in stocks. There it is. I just put it in the chat. As far as crypto, tons of good information on YouTube. I'm going to be writing a sort of a crypto 101 guide, but it's going to take me a little while to get that done. Personally, I think one of the best places to learn about particularly Bitcoin, I always recommend that would be a good place to start, would be Parker Lewis's Bitcoin articles that he has. Where is it? On the Satoshi Institute. I highly recommend anybody who's interested in specifically Bitcoin goes to, I just put it in the chat, and start there. There's some really great articles on learning about cryptocurrencies, especially Bitcoin. Yeah, Black Label Expat says, not your keys, not your coins. Perfectly true. That means if you don't have the keys, block ledger keys, and you can't remove your coins, then you don't own them. Mark says, I've been looking at staking Cardano and creating pools, gone down a bit of a rabbit hole with it. Yeah, a lot of Cardano is staked. I think up to about 70 or 71% of Cardano is being staked for interest. So that's locked in. But it can be, there's no lock-in period, so you can remove it whenever you want, for the most part. Collateral annual report released today. Off to court for directions. Okay, I missed that. I'm sure it's not going to be looking good. I've pretty much written off collateral as a complete. It's going to be a complete loss. Mindful Excellence is, what is the best crypto to invest in at this moment? I mean, I think if I was going to start from zero, I'd probably put 75% in Bitcoin, maybe, or maybe 50% Bitcoin, 25% into the big cap coins like Ethereum. But long term, I think Bitcoin's probably the safer of the coins. Depends what you're trying to do. If you're trying to score some, do some trading and stuff like that, the volatility of some of the other coins you could probably make money off. But again, I'm not a trader, so I'm a buy and hold. If I was going to buy and hold one or two coins, it would be Ethereum and Bitcoin. AkiChef said, do you think YouTube would have compensated you though? Maybe send you some free Bitcoin. Yeah. That was the crazy thing, that the channel had really gotten a lot of momentum, especially over the last couple of months before it got shut down. And it made me realize that YouTube can kill your business in a second. If I'd have had 500,000 subscribers, or I was actually making a living off of YouTube, then that would have been just completely gone in the fraction of a second. Am I bullish on gold? No. I'm not bullish on gold, but it will provide you with some possible downside protection if the stock market's correct downwards. I think gold will maybe get hit not as hard, but I'm not bullish on gold, and I'll tell you why. Because I think I own one gold stock, and it was down 17% from when I bought it. So it's as volatile. It's gold can be as volatile as any other stock, but it might give you some down protection in the event of an equity correction. But as far as, I don't think you're going to make a lot of money on gold in the long run, no. Not at these prices. Have you considered Celsius Network for staking? Yes, Celsius is another good option. You have BlockFi, you have Celsius, you have Coinbase. I think there's one other one, I can't remember. Alan, when is the next guest scheduled for? I'm really, really trying to get Louis from LoanPad to come on the stream, but he's hasn't given me a yes just yet. But I tell you what, if you're a LoanPad investor or you want to see Louis come on the stream, drop LoanPad an email and say, hey, would you come on Financial Things stream? Because I really want to get him on here. He's been promising me for a couple of years he'd do it. Can you run us by your top 5 just quickly? Yeah. Top 5 LoanPad, Assets Capital. This isn't not in any order because I can't remember what the list actually goes like. Assets Capital, LoanPad, Kuflink, Crowd Property, Lend Invest. That's the current top 5. Do you think it's a good time to buy Bitcoin? I think it's, I would buy Bitcoin now if I had cash. In fact, I put in a little bit of money every month into Bitcoin. So I think cost averaging in is definitely the way to go. Just like you would in the stocks, if you were setting up a monthly payment to go into an index tracker or the stocks that you own, I think it's a good way to do it with Bitcoin. Just dollar cost or pound cost average every month in. That way you hit the highs and the lows, not trying to time the markets, because we don't know whether now is a good time or a bad time. But what I do think is that in 10 years time, you're going to be very happy that you were able to buy at $30,000, because I think the price is going to be a hell of a lot higher than that. And we'll be looking back now going, wow, what an opportunity that we had to buy in at 30,000. So again, not financial advice. I think it's, this is an opportunity right now. Not to say that it couldn't go lower. It could drop down into the 20s again. But if you're a long-term Bitcoin holder, you're just going to keep buying when you can, keep cost averaging in, and you won't be so worried about these dips. Because think, if you cost averaged in from, say, March of 2020, you were buying when Bitcoin was 3,000, bought a little bit then, you bought it when it was 8, you bought it when it was 12, bought it when it went back down to 7, so on and so forth, all the way through 60, you would average out, you know, I don't know what the exact number is, but you'd probably still be okay. And I really think that is the way to do it. So yes, oh okay, England are already in the finals on Sunday. Wow, first time in more years than I've been alive. Of course, a big celebration already. For some reason I thought they were in the quarterfinals, so I guess on Sunday then I will have to watch this game. It will be important to go to the British pub, and hopefully England can be absolutely victorious. Okay, so again, if you can subscribe to the channel, that will do me a really big favor. I do have to say a quick shout out to Kuflink, the sponsor of this channel. Again, big thank you to Kuflink for supporting the channel, supporting Financial Thing. If you're not an investor in Kuflink, you can get yourself up to £4,000 in cash back on your first investment. Terms and capitals apply. Capital is at risk. Go to join.kuflink.com/financial-thing, or you can go to financialthing.com. On the cashback page, there is a link right here. Let me show you this right here on the cashback page. You can, hopefully, if this is working, there we go. Right here, there is links to companies that do offer cashback in some cases, sometimes not, but here is a sign up link for Kuflink, or you can go to the link that I'm showing right now. It supports them, helps support the channel. Thank you very much to everybody for watching. Go England on Sunday. Super excited about that. And thank you for spending your hour and 21 minutes with me tonight. And thanks for all the support that you have been showing, all the love and support over the last 5 years. Almost 6 years. So appreciate everybody. We'll be back next Thursday. We will have new guests coming in the next couple of months. If there's anybody that you want to see as a guest, drop me an email at help@financialthing.com, or go to the website. There's a contact form, or leave a comment on the video, and I will do my best to get that guest on here on the stream. So we'll see you next week, Thursday at 7:30 p.m. All being well. Thank you again. Have a wonderful night, and we'll speak soon.